Reaching your first $100,000 in your investment portfolio will probably be one of the hardest things you've ever done. Building wealth is like running a marathon. It's a long and painful journey with many highs and lows. Once you cross that finish line, from all the training and miles you've put in when no one is watching, makes the journey that much more special. Billionaire Charlie Munger said, "The first $100,000 is a B word, but you gotta do it. Even if it means walking everywhere and not eating anything that wasn't purchased with a coupon, find a way to get your hands on $100,000. Now in this video, I'm gonna go over why your first $100,000 is so difficult to reach, why it gets easier after that, and 2 methods on how to fast track to your first $100,000 as safe and as fast as possible. The main reason why the first 100K is such a struggle in investing is because to get there is most likely going to be your own allocation from what's left over from your own paychecks into your dividend ETF or dividend individual stock portfolio, and unfortunately won't be from the reinvesting your passive income you receive from your stock portfolio or even the compound interest from your share price returns on your investments. This is the case for me, as I'm allocating a couple $1,000s every paycheck bi-weekly into my own ETF portfolio to reach that $100,000 mark in my investment account, into both my core ETF of VOO and a smaller bucket of dividend ETFs, that of SCHD, because it has such a great dividend yield as well as excellent share price returns. But I might add another ETF to complement SCHD, that of DGRO. Now this is extremely tough because most of us first allocate our money into our necessary bills, right? Into stuff like food, water, the roof over your head, your family, and the list goes on. So if we invested $750 per month, which comes out to $9,000 per year, into a diversified dividend ETF like that of Vanguard's VYM, which is a high yielding dividend ETF, at an estimated 9% annual compounded return, it would take you nearly 8 years to cross over into that $100,000 investment territory, where over 70% of the nest egg is from you depositing your own money alone, and 30% is coming from your compounded interest. At 100K, your dividend portfolio has reached a pinnacle point in its investment cycle, and this is where the magic begins. With a significant amount invested, the compounding effect starts to gain some serious momentum, where the more you have invested, the more dividends you will earn. Like a sports car, where the more horsepower you have, the faster you're going to get to your destination. Think of your portfolio like a snowball rolling down a hill. Initially it's slow, but as it grows in size, the momentum increases, leading to accelerated growth. Then your dividend snowball starts to really pick up speed after hitting that 100K milestone, propelling your portfolio to greater returns into the 1 million to multiple millions of dollar territory, and your dividend income goes from being able to afford something like a cheap dinner to more income than your full-time job. So to put this in perspective, from saving $10,000 per year at a modest 7% annual return, the first 100K takes nearly 8 years to achieve, while the next $100,000 took 5 years to gain, so 2 years less. And your portfolio nest egg goes from being 30% compounded interest to 50% compound interest, and your deposits go from 70% of your portfolio contribution to 50%, aiding your portfolio to absolutely skyrocket its return potential. And every 100K after your first takes a shorter and shorter amount of time, from 8, 5, 3 to even 2 years to earn some Wall Street banker's yearly salary, while you just sit back on the beach, relax, while you're earning dividend payments and insane share price returns. And leading up to the first 6 figures in your portfolio, the dividend income ranges from a couple $100s a year in annual dividend income to a couple $1,000s. But after you hit that key milestone, your dividend income now gets interesting, where you start to make side hustle money to eventually enough to fully retire on that dividend payments. So with all that in mind, let's talk about strategies. So the first method that I would do to fast track a dividend investor to a ginormous dividend portfolio is first to utilize dividend ETFs. Now, an ETF is an exchange traded fund that contains a huge basket of many stocks, so you're already diversified in many different sectors, and because they are low risk, they are very passively managed, so it requires you little to no work to manage your portfolio besides clicking the buy button, and they are highly rewarding to dividend and any investor. Some of my favorites are that of SCHD, VYM, DGRO, JEPI, VIG, and the list goes on. And if you don't want a super high dividend yield from a traditional dividend ETF, then something like VTI or VOO, which are S&P 500 and total stock market index funds, will do the trick as well. The second best method is to buy individual dividend stocks, which do require a large amount of research with greater risk since you're basically creating your own dividend ETF. However, it can offer greater rewards of returns that can be higher than a regular standard dividend ETF. So you might get better returns and maybe you might get a better dividend yield. And if you're chasing a yield, go for a safer yield like a monthly dividend ETF, that of JEPI. And if you want something that might provide better returns, you could create an individual stock portfolio. Some of my favorite dividend stocks to buy and hold forever are that of Johnson & Johnson, McDonald's, Realty Income, Procter & Gamble, PepsiCo, Coca-Cola, and the list goes on. Now, taking a look at the performance of a regular dividend ETF, we can see over the past 10 years, it's a steady stream up of consistent returns that are very stable and reliable and overall will provide a great high yielding return. And over the past 5 years, we can see excellent returns that have kind of moved in the same direction of each other. Of all the different ETFs, they kind of move in that same stable trend. However, some of the best that have been yielding the highest returns over the past 5 years are that of SCHD, VIG, and DGRO. Now, taking a look at individual dividend stocks, you could get better returns over the past 10 years with that of, McDonald's have had an excellent share price return, as well as Coca-Cola, Procter & Gamble, as well as PepsiCo. And over the past 5 years, we could see it's going to be a little bit more on the more volatile side. However, you could get more amplified returns with some of these stocks. Comparing both a dividend ETF as well as individual stocks, we have on your screen SCHD, VYM, and DGRO being the 3 most popular in my opinion. And we have some of the best dividend individual stocks that of Coca-Cola, PepsiCo, Procter & Gamble, and McDonald's. And Procter & Gamble has taken the crown in returns over the past 5 years, followed by SCHD, McDonald's, DGRO, PepsiCo, VYM, and Coca-Cola. So it's kind of a mixed bag on whether or not you want to invest in an individual stock or a basket of stocks to yield the highest returns over the past 5 years. And it's going to be kind of interesting over the past 3 years. We can see a lot more volatility, like I just said. And over the past 3 years, we could see McDonald's absolutely rocking returns, and then followed by Coca-Cola, PepsiCo, and then VYM actually. So it's very interesting. We could see, over the short term and over the long term, a flip in returns. That about wraps it up for this video, guys. Hopefully you guys enjoyed it. If you guys did enjoy it, give it a like because this cute puppy did, and comment down below if you have reached that $100,000 milestone. I'm personally around 52% of the way there at 23 years old, which is quite exciting. And also, if anyone has any advice for those who went through that journey, comment down below as well. I am recording from a hotel. I'm gonna be putting a photo right about now of my hotel space that I'm recording my video at. I'm not on my traditional studio. All the hard work I'm gonna be doing is for you guys. Grind don't stop, continue to crush in the stock market, and have a great rest of your week, a month, and year. Take it easy, guys. Peace.